numbers, as you've said, top line growth has been 20%, and for the quarter we've reached 3,800 crores on the top line, and the bottom line has also grown up by 14% to 888 crores. The main thing as far as this quarter is concerned has been the integration with DHFL. First of all, the acquisition or the merger of DHFL and PCHFL has gone on well. As far as we are concerned, the retail book, which was earlier just 5% of our book, has now become 36% of our book. During this period, we've been able to add the 300 branches that we already had for DHFL. We've integrated the teams of DHFL and in fact have now started adding on more people as well. We've added now almost 2,000 more people as far as the DHFL is concerned. So our retail business today has 2,000 more people. We've started investing in technology and in all the analytics, and added 250 people there as well, and introducing newer products. So a lot of activity on that side. Retail, as I said, now our retail book today is now 21,000 crores with a focus on really affordable housing loans, as well as now doing partnerships. As far as the quality, I'm happy to say that the quality of the assets remains good. The new RBI circular, which was done on November 12, where you had to do a recognition of NPAs on a daily basis, has also has not had any significant impact on our provisioning and our profit and loss. Our gross NPA have remained in the same level, almost 3.3%. Net is 1.8%. So overall, I think as far as financial services is concerned, the main focus has been on the integration with DHFL, and it's going on track.
So what about the pharma business? How's that panning out? You also shared the update of demerger being in progression, and by December it should be a separate listed company.
Yes, so the demerger as far as pharma and the financial services is going on track, and as you said, in the third quarter of the next year in FY23, we should get it, unless there's something regulatory. But we've got all the approvals so far are going on fine, and we are waiting for the next step. As far as the pharma business is concerned, it has grown 18% over a period of 9 months, and our margins are now in the third quarter going up. As we had said earlier, they've gone up by 22%. And if I look at the different three segments of our pharma business out there, one is the CDMO business, which is really a global business. There the growth, the order book has been very strong. The growth has been 10%. That's really more because of some of the supply chain challenges, and so the demand is there. It's the supply chain, whether it's in terms of the available materials, also in terms of the attrition and the recruitment of people, particularly globally, is a difficult challenge. Costs have also gone up. As far as the complex hospital generics business is concerned, which has now grown 25% this year over the 9-month period. That's mainly because the surgeries in hospitals, particularly in the US, which is our biggest market, have actually come back to previous years. The rest of the world still needs to come back, but the US has come back, and that has resulted in the growth being 25%. In the Indian consumer OTC business, we have had really good growth in terms of 45%. So that's what the overall picture is. We've also also entered into a biological space by acquiring a minority stake in Yapan Bio in this quarter. So that's another significant, and we've got 28% in this business.
Excellent. Mr. Piramal, that one particular slide which you did share last quarter, which is catching everybody's attention. I wanted a little bit color from you. How is it growing? And that is your Bharat strategy that you really want to take via this acquisition, and with the help of technology, more retail focus and retail oriented products, you want to penetrate deeper into rest of the country, Bharat, tier 2, tier 3. How's that progress on that one?
So that is going well, as I said, in the implementation. First, what we are doing is that we had 300 branches which we had got when we got DHFL. We had to reactivate them because over a period of time, many of those had become inactive. So we've started reactivating them. We've also, as I said, recruited more than 2,000 people in these last few months. So that has been a big drive to recruit more people. So that, and to add the technology as well. So both, whether it's the technology, we've also got now, let's say, a new app done. So it's a combination. It's a phygital strategy where we want to go and become the dominant player as far as affordable housing, mass affordable housing in the tier 2, 3s, and it is going on well. In addition, we are also adding we are doing some partnerships as well, which are really more digitally led and with embedded finance in that. And that is also growing. We have got 10 partnerships now. These will be more in terms of getting consumers and more new customers on our back. When we acquired DHFL, we got a book of about 1 million new customers. So we need to integrate them and start cross-selling. Cross-selling will start now in the next few quarters.